Hi everyone, welcome to our 12-part series, Inside the One Big Beautiful Bill Act. I'm Kenny Birch, a tax director in our mortgage banking tax practice. And throughout this series, we're breaking down the most important tax changes under OB3 and what they mean for you. These updates can have a real impact on planning, compliance, and your bottom line. So if you want to stay ahead and make informed decisions, you're in the right place. Let's take a look at the qualified business income deduction under Section 199A and what changed under OB3 with Dawnna Houston, an expert in our mortgage banking tax practice.
Hi, Kenny. Thank you for having me today.
Great to have you, Dawnna. So to get started, what is the qualified business income deduction?
The Qualified Business Income Deduction, or QBI deduction, is a federal tax deduction that allows certain self-employed individuals and owners of pass-through businesses to deduct up to 20% of their qualified business income from their taxable income. The deduction can be limited by your total taxable income, whether the business is a specified service trade or business, and W-2 and capital limitations. This limitation does not apply to taxpayers with taxable income equal to or less than the threshold amount and is phased in for taxpayers with taxable income between the threshold amount and the phase-in ceiling. For this purpose, taxable income is calculated without any Section 199A deduction, or for tax years beginning after 2025, the Section 68 limitation on itemized deductions.
Thanks, Dawnna. What constitutes qualified business income?
Qualified business income is the net amount of qualified items of income, gain, deduction, and loss as to a qualified trade or business that is effectively connected to the conduct of a U.S. business.
Awesome, that's really helpful. What are the current rules for the QBI deduction?
Under the Tax Cuts and Jobs Act, the 20% QBI deduction was set to expire for tax years after 2025. For those above the phase-in ceiling, the deduction is limited to the greater of 50% of the taxpayer's allocable share of the W-2 wages paid by the business, or the sum of 25% of the taxpayer's share of the W-2 wages paid by the business, plus 2.5% of the taxpayer's share of the unadjusted basis of qualified property held by the qualified business.
Can you tell us what's changing with the enactment of OB3?
The deduction remains at 20% with OB3, but the good news is that the QBI deduction has been made permanent. The income thresholds where the deduction begins to phase out have been increased, meaning more taxpayers will be eligible for the deduction, and the new minimum $400 QBI deduction has been added for taxpayers with at least $1,000 of QBI.
Awesome, thanks, Dawnna. What are the new phase-in and threshold amounts?
The threshold amount is $197,300 for tax years beginning in 2025, or $394,600 for married individuals filing jointly. Before OB3, the deduction limitation phase-in ceiling was calculated by adding $50,000 to the threshold amount, $100,000 for married filing jointly. OB3 increased the phase-in for tax years beginning in 2025 to $75,000 and $150,000 respectively.
Awesome. There's a lot of information there. Could you give us a quick example?
Yes. Say an unmarried taxpayer has qualified business income of $100,000 and total taxable income of $150,000. Because the taxpayer's total taxable income is less than $197,300, the taxpayer's QBI deduction is equal to $20,000, 20% of $100,000. Now, if an unmarried taxpayer had qualified business income of $500,000 and total taxable income of $750,000, the tentative QBI deduction would be $100,000. But the QBI deduction would be limited because the total taxable income exceeds the phase-in ceiling of $247,300. Qualified business paid $150,000 in W-2 wages and has no qualified property. Since the total taxable income exceeds the phase-in ceiling, the deduction will be limited to $75,000, which is the greater of 50% of the W-2 wages paid, or 25% of the wages paid plus 2.5% of qualified property.
Thanks, Dawnna, for walking us through the QBI deduction changes. Please be sure to explore the rest of our series for more insights on how OB3 impacts taxpayers and businesses.